fine. You can go with the 2000.
But in the following years, will we get like the new updated versions?
Yeah, definitely.
Okay, thank you.
Yeah,
Sir.
definitely you'll be getting. So I hope we can go with the session. How many participants we can expect? Yeah, I will be recording it. I will be recording 100 plus. Okay. So at present I can see around 77 participants. So I think we should wait for another 2 minutes. And one more thing is every day just join around 5 minutes before the session, so that we can start the session exactly at 10. Okay. So already this FM is done by your internal faculty, or is it first time you are having training for financial management?
So we have that subject this semester, just started sometime before.
Okay. Yes. Okay. So next 30 or 30 hours, we'll be focusing on this financial management. So the main agenda of this session would be how you should prepare the financial ACCA financial management paper, and what are the key areas where you need to focus, and what are the major testing areas. It means what exactly examiner is expecting from financial management students. Okay. So this is our agenda for the next 30 hours. And how many of you already done with the previous F11 papers, FR or audit and assurance? Did anyone complete it? Okay, so you are going to appear in September, it seems, right? Training started, or you are going to appear in the September?
No, sir, training didn't start yet.
Okay. Yes. So I think it would be more appropriate if I give certain inputs on ACCA standard of exams also before going to FM. Do you want me to do that?
Yes, sir.
Definitely, I'll be doing that. Yes. So definitely, first we'll have an exposure on ACCA training. Sorry, ACCA style of exam. Then we'll go with this. Good morning, Shiv Shankar sir.
Sir, very good morning.
Good morning. I hope everything is fine.
Yeah, yes, sir.
Yes, sir. Nice to meet you. Nice to meet you.
Yes, sir. Thank you, sir. Actually, I planned to speak with you yesterday, but
Sorry, sir, I didn't get you.
yesterday I planned to speak with you personally.
Okay. Yeah. So I hope you might be having my contact number.
Yes, sir. Yes, sir.
Yes.
Yesterday evening only I got it, sir.
Okay. So please feel free to
Kiran Kumar
contact.
sir sent the details everything.
Yeah. He's very close to me, Kiran Kumar sir.
Okay, sir. Nice, sir.
Because for KJCC previously handled advanced audit and assurance, SBR paper, audit and assurance. So very familiar.
He's responsible for handling.
Yeah. Yes, sir. So nice to interact with. Yes. So still students are joining, sir. So shall I wait for another 2 or 3 minutes?
Yes, sir.
Okay.
Yesterday it's a independent timetable everything is.
Sorry, sir.
Within few minutes they all are joined, sir.
Yeah. Okay. Yeah. The senior batch is very familiar to me.
Okay, sir.
Now also I receive messages from this KGCC senior batch. If they night 11:30 also they used to message.
Oh, they just keep on disturbing this.
Yes. Once again, my request to the students is please try to join by 8:55. So every day. So if you can start the joining process by 8:50, so by 10 we can go with the, sorry, by 9 we can go with the session.
Recording in progress.
Shall we start, sir?
Yes, sir. Yes, sir.
Yes, sir. Thank you, sir. Thank you. So once again, good morning to all the students and good morning, Shiv Shankar, sir. Yes, this is Ravi Venkat Reddy. I'm a senior faculty for ISDC. So generally, I deal with most of complete excluding PM and APM. So generally, I deal with all ACCA papers, and I also deal with all the F1, F2, F3 of CMA papers, and I will also be handling this CMA USA papers. So I'm in professional teaching from the last 14 years. So I'm an ex-alumni from IMA Kozhikode. So this is a small introduction about myself. So today agenda would be we will be mainly focusing what exactly this ACCA style of how this ACCA style of examination will be, and what student need to focus. So and how the preparation should start. So how exactly students should prepare for these professional papers, because this is very important. I believe before starting the training, this is very important. And then we'll go have an introduction on the financial management. Okay. So I hope I'm audible to all the students. Can I get your response through chat box or at least by using your reaction?
Yes, sir, you're audible.
Yeah, thank you very much for your response. Yes. So first, what exactly what examiner will be expecting from the students? Now, it might be financial reporting, or it might be audit and assurance, or it might be financial management. So the first point is whatever concepts you learn. It means let us assume that in a particular subject, 12 or 13 chapters are there. So whatever concepts you learn, you need to develop a skill of linking the concept to the practical scenario. Because in ACCA, I hope most of you might be aware, the exam style will be case study based. It means case study based in the sense, suppose for F level papers, especially I'm focusing on financial reporting and financial management. You will be having three sections: section A, section B, and section C. In section A, you will be getting 15 multiple choice questions, and section B also multiple choice questions, but these are scenario based. It means a particular scenario will be given, and on that scenario, they will be structuring the MCQs. So you will be getting three scenarios in the section B, and every scenario consists of 5 questions, and each question mark is 2 marks. So these are also MCQs, but on a specific scenario. Suppose if I take financial management, you might get a scenario of working capital. So all the 5 MCQs will be on working capital. And there is a possibility of interlinking the option 1 with the option 2. Suppose if you miscalculated the first MCQ of a scenario base, then there is a great possibility that you might end up with a wrong answer with the second one. So you should be very cautious with the section B scenario based questions. And the section C, you will be getting consecutive based questions. Now consecutive based questions means it is a case study oriented. Now here you need to present your descriptive answers. So and each question consists of 20 marks. So each question consists of 20 marks. You will be getting 2 questions. So 40 marks is for descriptive, and 60 marks is for multiple choice questions. So one good news is good news in the ACCA exams is there is no negative marking for the MCQs. So they won't penalize if you give a wrong answer. But do remember, all the 4 options look similar. You should be very clear with the concept. You should very clear with the concept. So always do remember in the F level, your main agenda, whatever subject you are learning, don't ever try to learn the subject for the exam perspective. Try to step into the shoes. Suppose example F level, you can assume that you are a junior level manager or a junior level professional accountant. So what a junior level professional accountant need to know about the subject? Suppose if I ask you to step into the shoes of a junior finance manager in a company. So what you will be doing there? What is your job profile there? So in order to perform your duties, what knowledge you need to have? So that should be the main agenda while preparing this F level papers, F level papers in the ACCA. Don't ever try to learn the subject for the examination point of view, because the examiner, when they are structuring the questions, they will assume that you belongs to a junior level, a professional, and accordingly they will be framing this queries. So whatever you learn, suppose if I explain you about wealth maximization, let us assume that the primary objective of financial management is maximizing the wealth of the stakeholders or the shareholders. Now, don't generally most of the graduate students, if I say wealth maximization means they will be reading the definition of wealth maximization, but you should uh, develop a skill of linking that concept to the practical scenario. What is this wealth maximization? As a finance manager, how I can increase the wealth of my shareholders? What decisions I need to consider, or nothing but what factors I should consider to increase the wealth of my shareholders? It means whatever concept you learn, just link it to the scenario. And if you are unable to link it to the scenario, and if you find any difficulty in understanding a concept, yes, ISDC is always available to clarify your doubts. And you should also knowing about the resources, because there are very few professional bodies which are providing these kind of resources to the students. Because in ACCA, you can't even think about the resources which is available. So if you can explore the ACCA website, especially the student portal, there are very good resources which are useful for your examinations, like examiner documents, and you can also find the mock papers. And most important feature available for the student is practice platform. So for all the ACCA students, they will be you can find a practice platform, a link in the student portal. Now, what is this practice platform is? See, this is exactly the replica of your final exam platform. So anyway, you need to go for a computer-based exam only, right? So this practice platform is exactly similar to that particular final exam platform. So you can use this practice platform, and there are good number of questions in the practice platform. You can explore those questions, and you can give the attempt. You can go for n number of attempts, and you don't believe you will be having an opportunity to share the paper to the resource persons. So that option is also there. We, the resource persons, will be evaluating your papers also. So a complete package is available to the students, which aids for the exam preparation. So you can use the practice platform, and then the mock papers available in the portal, and the examiner document. This is very important. Now, what is this examiner document? After conducting the exams and after completing the evaluation, the examiners and the evaluators will be giving their comments. It means what are the common mistakes which are committed by the students, and how a specific query should be addressed. Suppose let us assume that there is an investment appraisal question. Now, examiner is expecting something different and the student presented different. So in order to minimize this particular issue, after conducting the exam, your examiner will be giving certain guidance. It means for this specific issue, how the answer to be. What are the mistakes committed by the students? How the answer student need to present. These are examiner documents. So before going with the exam, suppose if you are going with the December exams, you should go through the previous examiner documents. So just you need to go through the examiner points on the previous exams. And in addition to that, technical articles. These are very, very useful. ACCA will be publishing the technical articles. Now, generally, these technical articles are written by the members of examination body. Whatever the members of the ACCA examiner body, they will be writing the technical articles. Never miss the technical articles. These are very, very important for your exams. Once again, I repeat, never miss the technical articles. You should be very clear with the technical articles which are published at least 3 months prior to your exams. So you can search the technical articles in the ACCA website. Okay, so don't miss these technical articles. And next point is webinars. Now to the students, ACCA will be sending information regarding the webinars. And most of the students, they tend to miss it, but don't ever try to do that. Whenever you receive a webinar link from the ACCA, first try to register for that particular webinar. And after registering is, try your best efforts to attend them. Don't skip the webinar. Suppose because of any reasons, if you are unable to attend the webinar, if you register for it, they will be sending the handouts, means they will be sending the soft copy of the handouts to your mail. And they will also send the recording link. So because these ACCA webinars are conducted by the examiner body members of ACCA. So the inputs which they give, very, very important for your examination. So the way for professional preparation is, I will be mentioning the hierarchy. So if possible, please make a note of it. So what should be the hierarchy which you need to follow for preparing these professional papers, not only for FM, for all the ACCA papers I'm saying this. Okay. So the first important thing is you should go with the study text. Study text, suppose example, in the study text, I started by first chapter, that is functions of finance manager. I'm taking example of financial manager. So the first chapter is functions of finance manager. Now just go through the study text, functions of finance manager. Then after going through this, immediately open your examination kit. Try to solve the MCQs. First is try to solve the MCQs relating to that particular chapter 1. So you will be finding maybe 10 or 15 or maybe less than 10 also in your examination kit. So completely go through all the MCQs relating to the chapter 1. That should be your second step. First step is go through the chapter in the study text. Then open your examination kit, go through the MCQs from the examination kit, and after completing the MCQs, just go through the section C part, that is constructive based questions. Now in that, just try to see any information which is given or any case which deals with your chapter 1. And after completing that, as I mentioned about the ACCA website, in the ACCA website, you will find the previous mock papers. And anyway, after my training, I will be sharing this previous mock paper with all the students. Don't worry, I will be sharing that. So just open the previous mock papers. In that particular mock papers, try to see any question relating to the chapter 1. So just practice those. So that is the hierarchy for preparing the FFP. So every chapter you need to follow these steps. That should be the ideal methodology for preparing the professional papers. Start with study text reading. Second, go with the examination kit queries, MCQs. Then examination kit constructive based questions from the relevant chapter. Then refer the questions from your mock papers. And one more thing you can add is just refer the technical articles relating to that particular chapter. Try to search any technical articles relating to the chapter 1, that is functions of finance manager. If it is there, not necessary that you will be finding the technical article for all the chapters. So only few chapters will be there. So if it is there relevant to your chapter, just refer that. So this should be the process for preparing your exam. On an average, it is very difficult to say that average. I hope you agree with me, because it depends upon the student, right? How quickly a student might grasp that particular concept. So I don't think we can say that. I hope you got my point. It depends. So it depends. So some students might take maybe 30 minutes, or some students might take 1 hour or 45 minutes. Okay. And one more point I want to add. I generally saw that most of the students, when they prepare the timetable, so how they will be preparing the timetable is, yes, today I will be going for 2 hours, then every day 2 hours. Don't ever try to prepare the timetable on the basis of time. You need to prepare the timetable on the basis of concept. Suppose example, on 1st September, I decided to go through the chapter 1. No matter how much time it takes, you should complete the chapter. Don't strict your preparation to only 2 hours. I'm not saying that continuously you need to sit for 2 hours, but your plan is to complete the chapter 1 on September 1st. Then do that. Not necessary that immediately second day you should go with the next chapter. You can take your time, but try to complete, try to frame your timetable on the basis of concept rather than the time. I hope you understood, right? Is that clear? So if you can follow this particular timetable or this particular procedure for all the professional papers, it is very, very, very easy to crack the paper. And believe me, it is not that much difficult to crack these ACCA papers. Very simple. Just you should read the concept, you should understand the concept, and you should develop the skill of linking the concept to the scenario. Okay, so any queries? So I hope the information regarding the professional preparation is sufficient, or if you have any query, you can let me know. I request the participant to please feel free to ask your queries. So the first step starts by asking the questions. Do remember that. Any questions you want to ask?
So why aren't we starting with F7?
Sorry,
Why aren't we starting with F7?
why we are
Financial
not
reporting.
starting with F7?
Because like we got exemption for first 6 papers, right? So we are going to
Yeah.
F9.
Yes, yes. Yeah, first 6 papers you are exempted. So I believe what I understood is why we are not starting with training of F7. Is that your query?
Yes, sir.
Okay.
Yes, because chronologically isn't F7 the first paper?
Yeah, F7 is the first paper, but not necessary that you should give F7 first. See, there is no linkage with F7 and F9, na? Not necessary that if you want to attempt the F9 paper, you should clear F7 paper. I hope
But
you
sir,
got my point.
what about those people who want to attempt the F7 paper first?
Then you should speak it with the coordinator. You should speak it with the coordinator about the F7. Okay. I think F7 training might also start. Don't worry about that. F7 training will also start. But do remember, not necessary that you should give only F7 first. You can directly give F9 also first. Okay. You can go with F9, you can go with F8, and you can go with F7 also. Right? Any other questions? Any questions regarding this professional preparation before we go with the paper? And I hope everyone might have received the credentials. Yeah, recording class I will be uploading it. Okay, don't worry. So I may not be uploading today, but definitely I will be uploading all my recording sessions. Don't worry. Yes. Any other queries? And what I was asking is, I hope everyone might have received the credentials, login credentials. Yes. So because you can use those login credentials for accessing the practice platform. Okay. Yes. Whoever didn't receive, you can speak with the coordinator, so they will be helping. Okay. Yeah. You didn't receive the study text. Here in LMS, you can see in LMS you can access that. So the complete material is uploaded in the LMS. Okay. Yes. Now we'll speak about the FM. So what are the concepts and what are the core areas of our syllabus? So I believe I can go with financial management now. Still, anyone have any queries? Do you have any questions to ask? Yes. Now, if you see the contents, chapter 1, financial management functions. Now, in this chapter, we'll be mainly focusing what are the financial functions and what are the non-financial. We will mainly focus on what are the financial functions of the finance manager, like investment functions, dividend, and the financial functions. And we'll also focus on the financial objectives and non-financial objectives. Yeah, it is valid. See, it doesn't mean that it is valid up to June 2021. So you can use it for the next level preparation also. Don't worry, because there won't be any significant changes in the study state. Okay, and the updated version will also be available. So ISDC will be sending that. Okay. So one point is in F9, you won't be finding any significant changes, and that particular updated version maybe ISDC will be sending it to soon. Okay. So the chapter 1, the finance management functions, as I mentioned, here we will be focusing on the 3 important functions: investment, financial, and the dividend. And we'll also discuss the objectives, the financial objectives and the non-financial objectives. And can we use F9 paper that was published? I didn't get your query, Aksha. Okay. Yeah, you can use it. Absolutely fine. You can use it. And in the chapter 2, basic investment appraisal techniques. Yeah. So one request is last 10 minutes we'll have a discussion on. We'll have a Q&A session. Okay. So chapter 2, basic investment appraisal techniques. So we'll be mainly focusing on the different appraisal techniques like payback period, ROC or net present value or internal rate of return. And chapter 3, here we'll focus on discounted cash flow techniques. And chapter 4, investment appraisals, further aspects of discounted cash flows and asset investment decisions and capital raising. And the chapter 6, investment appraisal under uncertainty. So if you focus on chapter 2 to chapter 6, chapter 2, chapter 3, chapter 4, chapter 5, and chapter 6, these are mainly focused on investment decisions. It means how a finance manager need to make the investment decisions. So in order to make the investment decisions, we'll be going through these chapters. So there are different techniques. So we'll be going through all these techniques from chapter 2 to chapter 6. And the chapter 7, working capital management. So here we try to understand what is this working capital, how to manage the working capital. And in this working capital management, In the chapter 8, we'll discuss the inventory management, and chapter 9 will focus on accounts payable and accounts receivable, and chapter 10 we'll be discussing the cash and funding strategies. So chapter 8, 9 and 10, so completely on working capital. So the major core areas from this working capital management is accounts receivable, and then estimation of working capital, then the funding strategies. So these are the core areas of working capital. Then chapter 11, economic environment for business. So it means as a finance manager, what knowledge relating to the economic environment a finance manager need to have. So what are the different elements which are to be considered? And the chapter 12, finance markets and treasury functions. So here we need to consider the finance markets. What are the different financial markets? We will be understanding the capital market and money market, and what are the treasury functions of a finance manager. And the next one is foreign exchange risk. So here foreign exchange is nothing but foreign currency risk. So how to manage the foreign currency risk? What are the different types of risk in the foreign exchange risk, like economic risk, transaction risk, translation risk? So these are the major three. And we'll also discuss the different hedging instruments which can be used to minimize the foreign exchange risk, like how a finance manager can use the forwards, futures, options, and swaps to minimize the risk. And the chapter 14, interest rate risk. So here also we'll mainly focus on the different instruments or the different hedging instruments which are available to minimize the interest rate risk. And chapter 15, source of finance. And chapter 16, source of finance means here we'll have a complete understanding on the availability of debt sources and the availability of equity sources. So which source is more appropriate? Then chapter 16, dividend policies. So what factors which are to be considered by the finance manager in order to make the dividend decisions? So that we'll be discussing in chapter 16. And chapter 17 will focus on the computation of weighted average cost of capital. So what are the different components which are to be considered for calculating the weighted average cost of capital? And chapter 18, capital structure. Now capital structure means a company will be going with a combination of debt source and equity source. So what should be the optimum capital structure? So in order to in order to construct their capital structure, what factors which are to be considered? So this we'll be discussing in the chapter 18. And the chapter 19, financial ratios. So here we'll be understanding certain ratios like liquidity ratios, gearing ratios, and profitability ratios. And the last chapter, business valuation and the market efficiency. So here we understand the different methods for valuing the business and market efficiency. So this is the syllabus of your financial management. So total 20 chapters are there. Now in this, here you can see the main aim of the exam. So what is the main objective of this particular exam? So just I'm highlighting this paragraph, just focus on this. The exam aims to develop the knowledge and skill at a managerial level in relation to financing, investment, and dividend consideration. So if you can recollect at the beginning of the session, I already mentioned, you need to step into the shoes of a finance manager. Now, as a finance manager, what kind of task you will be performing in an organization? So in order to perform your duties, what knowledge you need to have? So that is the main expectation from a student by the examiner. So to develop the knowledge and skill at a management level, so you need to assume yourself as a finance manager in a company, and how you will make the investment decisions, how you will make the finance decisions and the dividend decisions. So this is a computer based exam. I hope most of you might be aware, and I already spoke about the format of the exam. You'll be having 3 sections, section A, section B, and the section C. Section A, 15 multiple choice questions of 2 marks each. And do remember, all the chapters are important for section A. So we cannot pick a specific chapter for section A. So complete syllabus is important for the section A, and the level of difficulty will be level 2. Level 2 means just you need to know about the concept. If you clearly know about the concept, that is sufficient to attempt this section A questions. So it means what I'm trying to say, compared with the section B, section A questions are a bit easier. I can't say that it will be easy, but compared with the section B, the section A difficulty level will be low. So do remember, complete syllabus is important for the section A. And section B, as I mentioned, you will be getting scenario based questions. So 3 scenarios you will be getting, and each scenario consists of 5 questions. And each question carries 2 marks. Now, the major chapters which you can expect from the section B is, if possible, please make a note of it. We can expect investment appraisals. It means chapter 4, chapter 5, chapter 4, chapter 5, chapter 6, chapter 9, then chapter 13, chapter 14, then chapter 17 and 16, and chapter 19. These are very, very important for scenario based questions. So generally, examiner will prefer to focus on these chapters for framing questions on section B. And the section C, as I mentioned, 220 marks question you will be getting. So here you can see the 220 mark question will mainly come from working capital management, investment appraisal, and business finance. So these are the core areas for the section C: working capital management and the investment appraisals. Okay. So I hope it is clear. Then just see this last paragraph. So you need to focus on the past articles in the sense technical articles. So the technical articles are very, very important, especially as I mentioned, 3 months prior to your examination. And if those technical articles are written by the member of the examining body of ACCA, then it will be more useful. So any query on this? Yes. So I hope the examining methodology of FM is clear. Shall we go with the chapter 1? I am expecting your response. Yeah. So the major elements of this chapter is financial management function, corporate strategy and corporate and financial objectives, company objectives, corporate stakeholders, agency theory, corporate governance, and achievement of corporate objectives, and setting objectives for not-for-profit organizations, financial objectives, then value for money, and the system analysis. So these are the contents of this chapter. So I hope the font is comfortable for all. Yes. Now the finance management functions, as I mentioned, a finance manager need to mainly make 3 kind of decisions: investment decisions, financial decisions, and the dividend decisions. Investment decisions means, so what kind of projects which are to be accepted, right? Suppose, let me give a small example. Let us assume that you are a finance manager in a company, and your company want to start a project with $1 lakh. So the required fund is it means you want to go with your company want to go with a project with $1 lakh. So you are having three alternatives: alternative one, alternative two, and alternative three. Now you need to select one among these three. You cannot go with all the three projects because your fund is limited to 1 lakh only. So you need to choose only one among these three alternatives. Now, if you are a finance manager, what factors you consider in order to make the investment decisions? It means what factors you will be considering to decide one project among these three. Whatever your opinions are there, please share. I hope you are clear with my question. Risk and potential return. Very good, Steven. Perfect. Risk and potential return perfectly. Any other? Any other points? Any participant? You want to add any points to this? Yes. We will consider the risk and the expected return from the project. In addition to that, suppose example, a project alternative one will be giving back your investment in 3 years, and alternative two is giving your complete investment in 5 years. It means if you invest 1 lakh, you can expect to receive the 1 lakh within 3 years from the project one. But project two takes 5 years. Now, which project you will choose? Project one or project two? Yes. So definitely you will be going with project one. So in our financial management terminology, we say it as payback period. So in our terminology, we say it as payback. So you will consider the payback period of a project. It means when you can recover your initial investment. So the projects which gives your investment in less period, generally we prefer those projects. So we will consider the payback period and we'll also consider the expected return. So technically we say it as ROC, nothing but ROCE, return on capital employed. So how much return you are expecting on your investment. And most importantly, you will see whether your expected return is more than your cost of capital or not. Now let me simplify this. As I mentioned, my company want to start the project with $1 lakh. Now the company borrowed this 1 lakh with an annual interest of 10%. It means company borrowed this 1 lakh amount with an annual interest of 10%. Now, what is the minimum return you will be expecting from the project now? If you are paying 10% per annum as interest on your borrowed fund, and if you are investing that particular borrowed fund in an investment, how much minimum return you will expect? Covering all the costs, perfect, Naina, very good. So it means that at least the return should be more than the cost of capital. So in order to know whether we are having a return more than the cost of capital, we calculate ROCE, nothing but return on capital employed. So we will be seeing the return on capital employed, that is one criteria. And the second criteria, as I mentioned, that is the period within which we can recover our investment, that is known as payback period. Only these two or any other factors we should consider. And obviously the risk, we will be considering the risk also. In addition to these three, so can I expect any other inputs from the participants? So in addition to these three, we might also consider the present position of the company and what is the objective. See, whenever a company select a project, do remember every organization will be having a vision and mission. So what are the vision and mission of the company? So what is their main objective? Of course, generally most of the company tries to maximize the wealth of the shareholders. The main primary objective of the company is to maximize the wealth. But if an organization want to maximize the wealth of their other stakeholders, see, in an organization, if you mainly focus on the shareholders are the stakeholders, employees are the stakeholders, and suppliers are the stakeholders, and next, the government can also be considered as stakeholders. Now, here, why I'm speaking about all these stakeholders is, what is the objective? Do they want to maximize the shareholders wealth, or they do want to maximize the stakeholders wealth? There is a difference. If a company want to maximize the wealth of the shareholders, nothing but equity shareholders, they always focus on those projects which give higher earning per share. It means that the projects which proves to be successful in long run, and the project which will maximize their market share price. It means that they will be selecting those projects which will maximize the market capitalization. That should be considered for maximizing the wealth of a shareholder. But when it comes to the maximizing the wealth of other stakeholders, suppose if I take employees as an example, I hope you might be aware, if you compare Reliance company and a Tata company, if I ask, what do you think, which company is a better company, Reliance or Tata? I hope you got my question. In these two companies, which company you think better company? So Aksha thinks Reliance and Jerome Tata. So Abhishek Tata. So most of yeah, can I know the reason why Tata? It means on what basis you are saying that Tata company is a better company compared with the Reliance? Whatever you know, please try to share. If you find difficulty in texting, you can unmute your speaker and you can share your opinion. So Tarun thinks Reliance. Now, just I want to know the justification. Why you think better financial? Okay. Let me highlight one more point here. Srivani, she thinks that in view Reliance and in view of employees, okay. We are more in touch with Reliance that Tata. Very smart answer. Okay, position. I appreciate the participants for your responses. Very good. Tata gives maximum wealth to shareholders and to poor. Okay. So Tata is a global brand where Reliance is more concentrated in India. Okay. Excellent. I'm very much happy with your responses. Very good. Yes. So yes, I do need to consider your points. Yes, perfectly correct. Now, technically speaking, why we generally considered Reliance is a better company than the Tata is. See, if you see the financials, one more point, Reliance is more a business model working, but Tata is a industrial model. Excellent point. Business model and industrial model. Very good. Both the companies, one second. Both the companies only do shares which are not going to affect the value of the business. Okay. Yeah. Now let me highlight a point. If you keenly observe the financials of both Reliance and Tata, now generally, yes, the Reliance might outperform the Tata when it comes to achieving their financial objectives. But when you focus on the non-financial elements, it means I'm speaking from the perspective of wealth maximization of other stakeholders. I'm not speaking about shareholders of Tata. I'm speaking about other stakeholders of Tata. So other stakeholders means employees or the suppliers or the bankers or the government. So whatever the transactions or whatever the business model that Tata is having, So they always try to maximize the shareholders, stakeholders' wealth rather than shareholders' wealth. And when it comes to the business ethics, anyway, that concept is not there. It is there in your AFM level. But when it comes to when we speak about the business ethics, so the business ethics of Tata is very high compared with the Reliance, because they always prefer to do the business ethically. Okay, I'm not saying that Reliance is completely ignoring that, but one of the participants says that Tata is a global market, global brand. Yes, we should agree. Even Reliance also nowadays spreading their wings to go for a global brand. But the major point is, if you see the sustainability and if you see the ethics, so Tata is very, very, very high compared with the Reliance company. Now, why I'm speaking about this is, whenever as a finance manager, if you are deciding a project, if you want to select an alternative project, you should also see what is your company objective. Whether the company want to maximize their own shareholders' wealth, or they are concentrated towards the welfare of all the stakeholders. Because some projects might focus only on the maximizing the shareholders. But if your company objective is to maximize the stakeholders' wealth, then definitely as a finance manager, you cannot suggest those projects to your board. So the objectives of the company should also be considered whenever you are making the decisions. So from the last 15-minute discussion and with the valuable inputs of the participants, we can conclude that we need to consider the return on capital employed to select a project. You should also consider the payback period. It means when we are expecting our initial investment, and we should also consider the risk in the project, and we should also consider the objectives of the company, right? So in order to consider all this, we do have certain investment appraisal techniques, so that we'll be discussing in the next chapters. That is already there in the next chapters. So the first important decision is investment decisions. I hope the overview on investment decisions is clear. So the first financial management function is investment. I hope it is clear. Yes. Now the next one is financial functions. Now, as I mentioned earlier, financial functions is how the company should procure the funds. Whether they need to go for bank loan, whether we should go for equity issue. So what are the different options which are available to fund requirement? Now, nowadays, I hope you might be aware, most of the startups are struggling to initiate their business because of lack of funds. Because of course their business model might be good, but they don't have the sufficient funds to go with the execution of their business model. So it is very important for a finance manager to make the financial decisions. Suppose, let me give a small example here. See, let us assume that you and your friend started a supermarket in 2018. So in a specific locality, you started a supermarket in a specific area in 2018, and fortunately, in a span of 2.5 years, you observed a significant growth in your supermarket business. Now in 2021, you want to go for an expansion. It means you want to open one more supermarket in another area. And in order to open that, definitely you need the funds. So how you will get the funds? So it means what are the factors you will consider to get the funds? How you will be procuring the required fund? Let us assume that you need another $50,000 to open a new outlet in a new area. Will you add one more friend as a partner to expand your business? Will you add one more friend to expand? Will you invite a partnership from your new friend? Okay, so Naina thinks okay. going with a new friend or inviting a new partner? Other participants, what do you think? Is it suggestable to go with a new partner? Can take even a bank loan. Which one you prefer? We'll look for some other resources. Okay, Jerome thinks that Akash, you say that you will be going with some other resources. Why you are not interested to invite a new partner? Can I know the reason? And even Jerome, you say that you will be going with a debt. You won't be going with a new partner. Can I know the reason why? So I request other participants also to please respond. So whatever you think, or if you find difficulty in texting this, you can unmute and you can share your opinion. If you are inviting a new partner, he should be much aware about the fee. Takes time and makes startup delay again. Okay. Okay. Yes, to a certain extent, we can consider this point. Now, in this case, don't you think if you share your business or if you are inviting a new partner means you are agreeing to share your profits to a new partner. And very important point, Naina mentioned, control of the company goes to him. Yes, definitely. Interest payment is the only obligation and the tax payable is less. Yes, very good point. Now let me focus on this. If you invite a new partner, now you need to give a share of your profit to the new partner, right? And as some of the participants responded, that the control will be diversified. Now previously the control was within the hands of two partners only. Now the control of the business will be in the hands of three partners. Exactly. Division of control maybe over debt financing is considered cheap. Yes. We can make any decisions without consulting the partner. Yes. So it means that partnership, inviting a new partner, technically known as issuing the fund, nothing but raising the funds through equity. For opening a new supermarket, you need the fund, and for raising the fund, if you invite a new partner, that is nothing but issuing the funds by nothing but raising the funds by issuing the shares. Now, if a company prefer to issue the extra shares, then definitely, as you rightly mentioned, there is a possibility of diversifying the control. Previously, the control was within two shareholders. Now, the control is spread among three shareholders. Then, yeah, exactly. Valid points, Tarun. And next important thing is one of the participants responded, debt sources are cheap compared to the equity source. Perfectly correct. Very good. Because generally we can get the funds through debt sources with less cost of capital compared with the equity. And one more point I want to add is tax benefit. It means if you borrow a specific amount and if you are paying interest on that, that interest can be considered as a deductible expenditure from the tax. It means you will be having a tax benefit if a company go for a debt source rather than an equity source. Now it means by whatever the 5 minute discussion which we had, now it looks like it is preferable for a company to go for a debt source. But if the availability of debt source is not there for the company, if the banker is not agreed to give the loan, then the only option is they need to go for the equity source. And one more point I want to add. Suppose I mentioned that you want to start a business in a new area. You want to open a supermarket in a new area. Now already the partner which you are planning to invite is having a very good name in that particular area. Now don't you think if you give partnership to him and if you open that particular supermarket in that area, you can expect a significant growth in your business. I hope you agree with my point. So it means what I'm trying to say here is several factors are there in order to consider or in order to make a financial decision. So the second important decision is financial decision. So there are good number of factors which are to be considered. Like I mentioned, the present position of the company. Suppose already the company took a bank loan, already they are paying a significant amount as interest. Now in that case, is it suggestable for the company to go for further loan? Definitely not, because already they are paying 70% of their income as interest. Now if they further increases their loan, then it might create a gearing obligation on the company. So it may not be serviceable to go for a debt. So all these factors are to be considered. Anyway, we do have a specific separate chapter to discuss on this, but just you need to know that you need to know the importance of making the financial decision by the finance. Gearing problem is nothing but fixed obligations. Gearing. So it means how many, what is the percentage of fixed obligations? Suppose let me take example. If I am earning 2 lakhs per annum, sorry, 2 lakhs per month as my salary is 2 lakhs per month if I assume that. And if I am paying 1,70,000 as EMIs from that, it means that my gearing is very high. My obligations is very high. Of course, I might be getting 2 lakhs, but 1,70,000 is paying towards the EMIs. So gearing means the fixed obligations of a person or of an entity is known as gearing. I hope now you understood, Naina. Yeah. So after making the financial decision, next important thing is dividend decisions. Now dividend decisions in the sense, after getting the returns from a project, after getting the returns from the project, how much return should be paid as dividend to the shareholder? Is it advisable to pay the total return as dividend to the shareholders, or is it advisable to pay only percentage of return as dividend to the shareholders? What do you think? Which one you will go? Okay, so Naina thinks only percentage should be paid. Other participants? As a finance manager, will you be paying total returns to the shareholders, or percentage also? What percentage you consider as ideal? Okay, only a percentage should be paid and rest should be kept as retained earning. Perfect, James. Very good. Yes, it means that most of the participants agree that only percentage of returns should be paid so that the remaining returns can be retained. Now, what is the advantage of this retained earnings? Why a company should prefer to retain the earnings? Invest in some other projects to meet the future financial requirements. Expansion of business, very good. Now, why we need to use the retained earnings for the future expansion? Why can't we borrow it from the external sources? See, most of the participants responded that for future business expansion, the company can use these retained earnings. Now, my question is why it should be used? Why can't the company go for a borrow, or why can't the company go for a new issue? Yes, perfect, Mohammed. Very good. Even Neeraj also responded. No interest has to be paid. So technically speaking, there will not be any cost of capital. There will not be any cost of capital because on retained earnings, there is no cost of capital. So definitely the company overall cost of capital will be reduced. Very good. So that's why most of the companies prefer to retain the earnings. It means suppose if the total earnings of the company is 100 and if the company prefer to retain 70%, only 30% will be paid to the shareholders. Now here there is a problem. How you will convince the shareholder now? Do you think shareholder will agree for that? Because you are paying only 30% of the earnings to them. You are not paying 100%. I hope you understood my question. There is a possibility that shareholder might show disinterest in your company investment. If you show the disinterest, don't you think there is a possibility of decrease in the share price in the share market? Of course, it should be informed. See, do remember, I want to make it very clear. When the company issues the share, it is practically not possible to give an assurance on the percentage of dividend, because dividend is something which mainly depends upon the performance of a company. If the company profits are good or high, then the shareholders will be getting higher dividend. So no company will assure a specific percentage as dividend at the time of issue of the shares. It is practically not possible also. So here my question is, how you will convince the shareholder? Wealth maximization is more important to shareholder, so it's beneficial for them to keep retained earnings in long run. Excellent, Tarun. Very good point. So even Farhan also responded, because it will be good for long term if yes, exactly. Very good, Farhan. So as per the responses of the participants, it means that we can convince the shareholder that if you, now here let me give an example. As most of the participants says that retained earnings are no cost fund procurements. So if you are expanding the business with a fund on which there is no cost of capital, there is a possibility that in future company will get high profits. And if the company get high profits, they will be getting high dividend in future. That is that in potential or the projected futures, projected profits of the company will be high in future. So that in future they will be getting high returns. And in addition to that, if a company is expanding, means it's definitely the share price in the market will also increase. As uh, let me see the participant who spoke about this. Yeah, and unable to find. Yes, there is a very valid response from the participant. Says that if the funds are retained and if it is used for a future business expansion, definitely it will increase the share price in the market. Now, how it will increase is, suppose example, an ex-limited company is there. Now, this ex-limited company was in the business of banking. Now, when the company is in the banking business, let us assume that in the stock market, its share price is 100 rupees. Now, with their retained earnings, they want to go for expansion and they want to start insurance business. It means they are diversifying their portfolio. Now, if a company prefer to diversify the portfolio, if they enters into a new business, now as most of you might be knowing, definitely the share price in the market will increase. Now, if I am a shareholder in the company, let us assume that I'm having 1,000 shares in the ex-limited company. So it means that as per my present value, it means if I assume 100 rupees as share price, my value of investment is 1 lakh. But because of expansion, the share price in the market increases to 200. It means my wealth, my value, my total share value increases from 1 lakh to 2 lakhs. So technically speaking, that is known as wealth maximization. So instead of paying the dividend to the shareholder, if it is retained, and if that particular retained amount is utilized for the business expansion, then there is a possibility of wealth maximization. So these are the points which can be considered by a finance manager to make the dividend decisions. So these are the key decisions of a finance manager. So shall I assume that the finance management functions are clear? Any question? Next one. So the main agenda of the decisions is control resources to ensure efficient and effective use. It means whatever the company resources are there, it should be used efficiently and effectively. See, if you focus on the definition of financial management, so financial management means procurement and effective utilization of funds. So procurement and effective utilization of funds is known as financial management. So here all the decisions, it might be a dividend decision, or it might be investment decision, or it might be financial decision. It should be taken in such a way that all these resources are utilized in efficient and effective manner. And consider the economic environment of the organization. This is one more important point. Whenever you are making these kind of decisions, you should focus on the economic environment of the organization. What does it mean? Economic environment means what do you mean by this economic environment? We should consider the economic environment of the organization. Demand and supply functions. Okay, very good. Now, not only economic environment, we should also consider the other factors also. Suppose the best example now nowadays you can consider this Afghanistan issue. So that is political environment, but economic environment is we should focus on certain factors like inflation rates, interest rates. So what is the inflation rates of an economy, how it is increasing the inflation rates, even the government intervention, all this comes under the political factors. Okay, economic factors means like interest rates, increase in the interest rates, what is the repo rates and reverse repo rates, and what is how the inflation has been increased. All these factors are to be considered. So anyway, we spoke about the risk and potential risk. So these are the major three points which are to be considered in order to make these three decisions. Now the key point here is management accounting and financial management are considered with resources usage to meet the targets. However, management accounting deals in short-term time scales and the financial management is concerned with the long term. You don't believe from the last 6 to 7 windows, this was a repeated question. What is the major difference between a management accounting and the financial management? So just focus on this. Management accounting deals in a short-term time scale and the financial management is concerned with the long term. So just do remember this. And one more point is in your pocket notes, you will find this key point after the chapter. So if possible, please make a note of all these key points in a separate place or a separate book, or in your laptop also, just copy it and paste it in a separate Word file. All the chapters, at the end of the chapter, you will be finding these key points. Just make a note of it, because if you prepare a separate file of all the key points, if you go through that, you can easily attempt 4 to 5 MCQs. See, what I'm saying is, at the end of every chapter, you will find this key point. So just copy this particular key point and paste it in a Word file. All the chapters do this because you can use it as a last minute reference. If you go through all these key points, at least you can attempt minimum 3 to 4 MCQs from your section A. Okay, I hope you understood it. Is that clear? Yeah. So any queries on that? Shall we go with the corporate strategy and corporate and financial objectives? No. Working notes is not necessary, Naina. In case of MCQs, it is not necessary because you don't find any place also to show the working notes. Not required. Just you need to pick the right option. That's it. Okay. Yeah. Only right option will give 2 marks. See, but don't you think in order to pick the right option, you need to work it? See, what I'm trying to say, it is not necessary to show the working notes to the evaluator. You can use your scratch pad. In your exam practice platform, you will be finding a separate option called scratch pad. You can click that particular scratch pad. On that, you can do the working. And you can decide what is the right option. Okay. And one more point, anyway, you asked this question, let me clarify this. In some MCQs, you need to pick 2 options. Suppose they might give an MCQ and find the 2 correct options. Suppose among the 4 options, you need to pick 2 correct options. Now let us assume that out of 2 picked options, only one was right and the other one was wrong option. In that case, you won't get the partial answer. You will be losing total 2 marks. Did you understood what I said? Suppose if you need to identify 2 options, but you were able to identify only one option. So there you won't be getting any partial mark. They won't give 1 mark in that case. You will be losing total 2 marks. Okay. Yeah, it is either 2 or 0. That's it. So there is no concept of 1 mark. Yes. Now the corporate strategy and corporate and financial objectives. So just focus on this. So broad board-based goals, detailed objectives, target is. Now first we try to understand what is this financial objectives and non-financial objectives. Suppose if a company want to achieve an if a company want to achieve a return of 20% in the current year. Now what do you think? Is it a financial objective or non-financial objective? Financial objective. Very good. Yes, if a company want to achieve an earning per share of 10 during the current year, is it financial or non-financial? Financial objective. Okay. Now, if a company want to generate 1,000 employment opportunities during the current year, is it financial or non-financial? Very good, non-financial. Or if a company want to minimize the pollution caused by them, is it financial or non-financial? Yes. So you should clearly aware about the difference between financial and non-financial. Now, in these financial objectives, we will mainly focus on this commercial, financial, and strategy. So let me explain what exactly this means. Suppose here you can see corporate commercial objective. Now, what is this corporate commercial objective? Suppose if a company want to expand into the new market. Expand into the new market means that comes under the category of corporate commercial objective. Now, what is the financial objective from the commercial element? See, example, X Limited company is there. Now, this particular X Limited company want to geographically spread their business. It means now the X Limited company was there in India only. Now they want to open their, they want to conduct their business in UK. So that is considered as corporate commercial objective. And what is the corporate financial objective? Here, return on capital employed, earning per share, share price. It means that if a company want to increase the return on capital employed, or if a company want to increase their earning per share, or if a company want to increase their market price in the stock market, market share price in the stock market, those are considered as corporate financial objective. Expanding into the new market is corporate commercial objective, and achieving a specific target, it means if they want to achieve this much return on capital employed or EPS, that is corporate financial objective. And how it will be achieved? See, here I gave an example that X Limited company want to start their business in UK. So what is the strategy? How they will be starting the business? Whether they will be establishing their branch. If they prefer to establish their branch, that is known as organic. Or if they want to acquire a company which is there in the UK, that is known as acquisition. I hope you might have understood the linkage between these. If a company want to start a new business in a new country, corporate commercial objective. And if they are expecting a specific ROC and EPS, that is corporate financial objective. How they are achieving that? Whether they are starting their new branch there, or whether they are acquiring a local company in the UK, that is known as acquisition. So that we say it as a strategy. Now let me know whether you understood about the corporate elements. Is that clear? Yes. Yeah. Now the next one is, if you see the business. Now when it comes to the business commercial objective, suppose if a company want to acquire a new premises, let us assume that company want to acquire a building, or a company want to start a new project, that is known as a business commercial objective. Now when it comes to business financial objective, what is the projected returns from that business? If a company start a new project, so how much return the new project is going to give? That is business financial objective. Now how to acquire that asset? It means that how to go with that, whether to buy that particular asset or whether it is preferred to lease that asset. Suppose if the company don't have sufficient financial resources to buy it, then the company might go with a lease option. So the strategy means leasing or buying. A company want to acquire a new asset, that is business commercial object. If the new asset is acquired, what is the projected returns from the new asset? That is business financial objective. And how that particular new asset will be done, whether to buy it or whether to lease it, that is known as the strategy. So I hope the business concept is clear. Yes. Now operational. So operational means in their day-to-day activities, in their operational activities, they do have certain issues like maintain the liquidity levels. Now maintain the liquidity levels means always the company need to have sufficient cash reserves to meet their operational requirements. So maintaining the liquidity level is considered as operational commercial objective. It means every month or every year they want to have a specific level so that the company won't face any liquidity issues. That is operational commercial objective. And operational financial objective is what the cash levels they are planning and what is the receivable days. It means the significant element which generally affects the liquidity of the company is the cash level, how much cash a company need to maintain. Or let me put in this way. Suppose two companies are there, company X and company Y. Now company X, they are having around 10 million in their current account. It means they are maintaining 10 million fund in their current account. But company Y, they are maintaining only 1 million in the current account. It means X Limited is going for very conservative approach. Conservative in the sense, what I'm trying to say here is they don't want to face any liquidity issues. So that's why they are maintaining 10 million in their current account. But X Limited, sorry, Y Limited, they maintain only 1 million in the current account, and the remaining 9 million they are using for their business purpose. It means they want to earn an extra profit on the remaining 9 million. But X company don't want to take such risk. They are maintaining total 10 million. Now, what do you think? Which should be considered as a right approach? Approach of X or approach of Y? So, what is your opinion on this? My question is, let us assume the two companies are there, company X and company Y. Company X is preferring to maintain a 10 million balance in their current account. And Y Limited, Y company, out of 10 million, they are maintaining only 1 million, and the remaining 9 million, they are using it to generate extra profits to the company. It means they invested in a short-term investment. So what would be the right strategy? Yeah, I think most of the participants think that why? Because they are not preferring to keep the funds idle. Now here, I recollected one of the famous quotation which is given by Warren Buffett. What Warren Buffett says is, if you want to become rich, you should not run. You need to make your money to run. I hope you might have understood this. If you want to become rich, instead of running by yourself, if you can train your money to run, then definitely you will be going to be rich. So that depends on other financial factors like market, the type of business. Yeah, definitely other financial factors are to be considered. So that's what I'm saying here. So here, when it comes to operational financial level, the other financial levels is what are the receivable days. It means how much credit period is given. Suppose let us assume that if I take company X and company Y as an example, if the company X is giving a credit period to their customers 30 days, and in case of company Y, if they are giving credit period to the customers of 60 days, it means within 30 days they are expecting the amount from their customers. But in case of Y, they gave 60 days. So in that case, definitely X Limited can maintain less level of fund in their current account compared with the Y Limited. Because in case of Y, they need 2 months time to recover the amount from their customers. But in case of X, they need only 1 month time. So definitely receivable days are less in case of X. So they can go with maintaining the less cash balance in their current account. Y Limited, because they are having 6 months, 60 days credit period. So definitely they need to maintain a higher level of cash compared with the X Limited. So this is considered as operational financial obligations. It means that how much cash levels they are planning to maintain and how much credit period they are planning to give it to their customers. Now, how these decisions can be done? The strategy for this is whether to go with cash on delivery or whether to give the credit to the customers. So these are operational commercial objective, operational financial objective, and operational strategy. So if you have any question on these three, let me know. Okay, corporate strategy. Now, generally, in case of corporate, actually we discussed that if a company want to enter into a new market, so if they that enter into a new market is a corporate commercial objective, and financial is how much return they are expecting from that particular new market. That is financial objective. Strategy, how to enter into the new market. See, as I mentioned, if I want to enter into the UK market, how to enter? One option is I can open my branch in UK, that is known as organic method, or directly I can purchase a local company in the UK, that is known as acquisition. So this is corporate strategy. I hope I addressed your query. Yeah. Operational commercial. Okay, let me explain. Okay. Now first let me explain the operational commercial. So operational commercial elements means what are the internal elements? What are the operational objectives of the company? Operational objectives means whether they want to maintain the liquidity levels or not. Liquidity levels means the availability of funds at the right time. It means they need to maintain a certain cash levels so that they won't face any liquidity issues. That is known as operational commercial objective. So how much cash level a company need to, it means that, see here what I'm trying to say, the company might have two approaches. If they focus on profitability, there is an option that they might forgo their liquidity. Profitability in the sense they always try to maximize the return. That is known as profitability. Now liquidity in the sense they always try to keep sufficient cash levels so that they don't face any significant liquidity issues. So deciding on that, whether the company want to go for profitability level or whether the company preferring to maintain the liquidity level, that is considered as operational commercial objective. Now, what should be the strategy? Suppose they might go with, let me give an example. If a company prefer to maximize the profit, how a company can maximize the profit? By maximizing the sales. How a company can maximize the sale? By giving extra credit to the customers. Suppose if a company says that you can take 2 months time to repay the amount, don't you think there is a possibility of increasing the sales? So that can be a strategy there. If a company prefer to go for maintaining the liquidity, it means they don't want to face any liquidity issues. Now, what should be the strategy in that case? Instead of giving the credit to the customer, they prefer to sell it on cash on delivery basis because they are focusing on liquidity level. So that should be the strategy. So I hope I addressed your query. Is that clear? So any query on these objectives, let me know. So I hope the financial objectives are clear because you can expect an MCQ on this. So you were asked to identify whether it should be considered as a corporate commercial or a corporate financial. Yes. So the first day, I don't want you to trouble. So tomorrow we'll have a discussion on company objectives. Then we'll also focus on corporate stakeholders, agency theory, and the measuring achievement of corporate objectives. So I want everyone to please once go through this So tomorrow we'll have a discussion on this. Is that clear? Once again, I repeat. So just go through the certain elements, corporate stakeholders, agency theory. Yeah, so company objectives, corporate stakeholders, agency theory, corporate, and next measuring the achievement of corporate objectives, and we'll also discuss the objectives of not for profit. So just go through this. This is already there in your resources of LMS. So please go through this, and tomorrow we'll have a discussion on this. Okay. So I hope that today discussion is clear for all. Any question you want me to address? Any queries? Am I audible? Yeah, here let me explain about the profitability here. The profitability means if the finance manager mainly focus on maximizing their profits. Now, in case of maximizing the profit, now don't you think instead of keeping the funds idle, they will be preferring to invest it in short-term investment so that they can generate the secondary income. They might maximize the profit. It means the main objective of the finance manager is they don't want to keep the idle funds. The idle funds will be utilized for generating extra profit to the company. That is known as profit. So it depends whether the finance manager is focusing on profitability or the liquidity. So always there is an issue with this. If a company finance manager focus on profitability, it might create a liquidity issues. If they focus on the liquidity, it might minimize the profitability. Okay, so how the surplus money is to be utilized? If they want to utilize the surplus fund for the short-term profits or the short-term returns, then that is known as profitability. I hope you understood it, Neeraj. Yeah. So any other question? Shivshankar sir, am I audible?
Yes, sir, you are audible, sir.
Yes, yes. So if no queries means we can end the session.
Okay, sir.
Yeah, case study questions in the exam. Yeah, in case of case study exam, they will be provided in the exam platform itself. They will be giving a spreadsheet and a word sheet. So they will be providing a spreadsheet and the word sheet. In that, you need to attempt the descriptive question. Right. And don't worry, one day I will be showing that exam platform also. So we will plan a 30-minute session on exploring the practice platform. Okay. Yeah. And Neeraj, yes, if the company mainly, if the liquidity issues arises, if a company mainly focus on the profitability, then there is a possibility that the company may face the liquidity issues. Yes. Any other queries? Okay, then we will, if you don't have anything else, we can end the session. I hope the concept which we discussed today, all those concepts are clear. And I appreciate the participants who actively responded. And I'm expecting the same from all the participants. So please try to interact you in the sessions. So with that interaction only, you can, what is this, upgrade your knowledge. And I believe you are clear with the methodology for preparing the professional papers, and I expect that you will be following the same methodology. Okay, so that's it from my end. So I hope you don't have any queries on today's session, and I'm expecting everyone to please focus on the concept which we are going to discuss in the next session. So please come prepared. So this is already there in your LMS. You can refer. Okay, so have a good day. Shiv Shankar sir, shall I end the session?
Yes, sir. Yes, sir.
Am I audible, sir?
Yes, sir. Yes, sir.
Yeah,
You are
yeah.
final.
Yes, sir. So just I'm ending the
Thank you,
session.
sir.
Thank you, sir.
Yes, sir.